Hi everyone, and welcome to the AWB Tax webinar. My name is Amber Carter, Director of Tax Policy here at the Association of Washington Business. Today's topic is tax reform, and we are privileged to have with us State Treasurer Jim McIntyre. Jim will share with us his thoughts on tax reform and why he believes Washington should have this discussion. Jim was first elected as State Treasurer in 2008 and is serving his second term. As our Treasurer, Jim is responsible for the safety and security of state tax dollars. This means managing cash flow, state debt, and bond sales. AWB has worked with Jim since his time as a 5-term state representative, where he served as chairman of the House Finance Committee. But Jim's passion for tax reform started prior to government service, working as a business economist at Navigant Consulting, Inc. He also earned his PhD in economics at the University of Washington, where he founded and directed a fiscal policy center and taught economics for 25 years. As you think of questions, please type them in the dialog box to the right, and we'll answer them after Jim's presentation. With that, welcome Treasurer McIntyre, and thank you for your time today.
Thank you very much. I appreciate the chance to be here and talk with you this morning. As Treasurer, I'm responsible for $400 billion of transactions every year, a $20 billion debt portfolio, investment of $15 billion in short-term assets, public deposits of $6 billion around the state, and I've served for 3 terms as chair of the $104 billion Washington State Investment Board. I started my career working for Hubert Humphrey. That dates me a little bit, I realize, but and I was working for him at the Congressional Joint Economic Committee, the committee in Congress that focuses on the long-term economic growth for the country. As treasurer, as the treasurer who pledges the state's full faith and credit to on 25-year bonds on a regular basis, I'm still concerned with long-term issues, such as keeping Washington's public pensions from to be the best funded of all of the public pension systems in the country. Another long-term issue that occupies my time is the development of a transportation funding package that doesn't over-leverage the gas tax. By 2020, we will have pledged over 90% of the state gas tax revenue for debt service, and that package that was passed by the Senate recently offers no real relief from that overdependence on debt. These are important issues, and they're long-term issues that I care deeply about, and I'm happy to talk with you further about them. But today, what I'd like to do is to talk with you about the issue that keeps me up at night. Now, managing a $20 billion debt portfolio means that I am the person that has the responsibility of managing your relationship between Washington and its investors. And yes, we do have investors. $20 billion is a lot of money. The credit agencies pay a lot of attention to credit rating agencies pay a lot of attention to how we manage our finances in Washington State. But the reality is that if you own several $100 million of our debt, like some of the major investment houses on the East Coast do, such as BlackRock or Fidelity or AllianceBernstein, you actually pay very close attention to how we manage our finances. And I go back and visit those folks generally about once a year, and they ask a lot of very significant questions. Their focus is very concerned about what we're doing and how we manage our finances. Now, the credit rating agencies have a fair amount of confidence in Washington State. They have given us a AA+ or AA1 credit rating ever since the beginning of the recession and all the way through it. And they have found that Washington does a pretty good job in resolving its issues. But they have historically noted our narrow tax base. And a recent Standard & Poor's study has pointed out that a slow, that Washington is one of many states that is sales tax dependent, and as a result has had slow growth in revenues during the last several years. To quote from their most recent credit rating analysis, they talk about Washington as a sales tax-based revenue structure that is following a decades-long stagnating trajectory as a share of total personal income. And if you take a look at the chart here, what you see is a chart that measures state tax revenue as a percent of total personal income in Washington state. That was back, if you go back to the early 90s, in fact mid-90s, latest mid-90s, that percentage was around 7%. It has now dropped to somewhere in the area of about 4.5% and is a long-term downward trend. Now, for those of you who have, it's been a while since you've taken a class in macroeconomics, personal income here is not a reference to average incomes or individuals' incomes necessarily. It is a reference to the aggregate incomes, including all personal income, wages, salaries, interest, dividends, rents, as well as profits for businesses and other types of income that have been earned in the state. It's about 85% of the state's gross domestic product. And that is an aggregate measure, so it's a good measure. Most economists use this as a measure of our economy. So what we're seeing here is a downward trend in the share of our economy that is being devoted to state services. Now, in some of my most recent discussions with credit rating agencies and investors, one of the biggest issues that they've raised is that about how is the state going to respond to the court decision or court finding on state funding for K-12 education, or the McCleary decision. And they keep asking me, what does contempt of court mean? And how will the state actually find the additional $4 to $7 billion per biennium cost to implement the statutory definition of full funding for K-12 education, given that more than 85% of the $20 billion of shortfalls we've seen during the last 6 years were solved with temporary taxes, one-time federal aid, fund shifts, savings and efficiencies, shifts to local taxes and tuition, and budget cuts. The reality is the state has got a shrinking tax base relative to its economic growth. That is to say, our long-term growth rate in this state for personal income averages about 6% a year, but our long-term tax growth rate or revenue growth rate averages about 4.5% a year. This is that fascinating discussion about compound interest rates in reverse. It's a compound shrinkage that is going to continue for quite some time. The people oftentimes look at this and they say, well, isn't this a good thing? Doesn't this mean that we're getting more for less? Let me come back to that question. First, let's really talk about what the causes of this downward trend are. And there are two that I would like to really emphasize for you. First, I would point out that our property tax has a 1% growth limit on regular property tax revenues, which is to say local governments and state government which are receiving property taxes cannot allow those regular levies to grow by more than 1% a year. Obviously, if your economy is growing faster rate, you're not always able to pick up an additional amount of revenue from new property being added to the tax rolls. So the challenge we have with the property tax is that it significantly depresses the growth rate in revenues. second, relative to the economy. The second challenge, and perhaps the largest challenge because it is the primary source of funding for the state general fund, is the sales tax. And if you think back over the last 50 years, turn the clock back to 1965, something like 60% of consumer expenditures at that time were subject to the retail sales tax. Today, that number is somewhere around 30%. And the reason for that is that we've had an explosion in the service and information economy. We've had an explosion in productivity, really, and the cost, the real cost of a lot of those goods that we were buying back then, taxable goods, has actually fallen on a relative basis. So, in effect, this is a long-term economic shift. Now, some would argue that if we simply tax internet sales or mail order sales, we could reverse that trend. That's not true. It would have a minor impact in terms of a slight bump to those revenues, but it wouldn't be very significant at all. So the reality is that this downward trend is one that's likely to continue. It is projected to continue by our forecast council, and it is one that means that we are facing a real challenge in terms of our ability to fund state services that are demanded as incomes increase. Now, typically, the demand for public services goes up with incomes. These are normal goods, and as our incomes go up, we'd like to see better education, we'd like to see better health care, we'd like to make sure that our criminal justice system is secure. There's a lot of things that we'd like to see happen, and we don't always, can't always afford them with a shrinking tax base. Now, the result of this shrinking tax base, you might say, is looks like it's a real benefit. But let me see if I have another chart here for you.
Click here real quick.
Where?
Click.
I'm sorry, I'm a little technically challenged here. Can I get a little help? There we are. Okay. This next chart illustrates part of the result of a shrinking state tax base. And what you see here is the percentage of school expenditures and K-12 school expenditures in Washington State that is being offset or financed by local school levies. And what we see is that as the state's tax base has shrunk, more and more of these responsibilities have been pushed off to local school districts. And indeed, local levies now account for somewhere in the vicinity of 20% of all of the money being spent on our school system. And this is part of the real focus and real concern about the McCleary decision. And part of the direction from the McCleary decision and previous decisions has been, can we find a way so that we're not having local districts, in some cases depending on as much as 36% of their expenditures on education coming from local levies, since those are subject to voter approval and can sometimes, which can sometimes fail. So the uncertainty of local funding is a major concern. And certainly the legislature has found it necessary to allow local levies to go up over time as a way of offsetting their inability to provide funding to local schools. And that was certainly the case. You can see during the time period of the Great Recession that the legislature did this in spades and really allowed local districts to go out and raise the kind of money that they were not able to provide when state revenues shrank significantly. Now, K-12 schools are not the only one facing this. We see the same pattern with tuition. And the tuition, the share of state spending on higher education, including our financial aid programs, has been shifting much more heavily to tuition. We now have about just under 50% of the, so I think it's 48% of state expenditures on education or state costs for higher education are actually being shouldered by students and their parents, of which I'm one. And I would say that this doubling of the state of tuition share for higher education funding since 2002 has had a real impact on the affordability and accessibility of higher education. And this has to be a major consideration and concern for the state's employers. And indeed, we've heard quite a bit about that in the legislature. Continuing to shift burdens to higher ed and then carving out state support for higher ed has made it very, very difficult for people to get the kind of education and degrees they need in the 21st century economy. Now, what I would argue is that the shrinking tax base that we had, we see here relative to our economic growth suggests that it is simply mathematically impossible to sustain an adequate education system with this kind of a tax structure. A shrinking tax base makes it mathematically impossible to sustain an adequate education system, given the fact that education accounts for nearly 60% of state expenditures. So, given that reality, we have what many would call a structural deficit. And this structural deficit underscores several of the other criticisms that have been leveled against our state's tax system over the last several years. First of all, as many have heard and talked about, Washington's tax system is probably one of the most unfair in the country when it comes to the percentage of personal incomes that are spent, individual incomes that are spent on taxes, state taxes, relative to their income. And that has been widely noted, and Standard & Poor's in a recent analysis of this actually argues that this has helped to drive up income inequality in some states, and they point to our state as one of those. Second major criticism is that our state tax system is pretty unstable, both in terms of the revenues that it generates, and you can see that precipitous drop that we had experienced back in the 2008 to 2010 time period. Trust me, I came into office as the state treasurer. We had a treasury of about $6 billion when I was campaigning in August, and by the time I took office, it was closer to $2 billion. And that was a pretty hair-raising time. So I think, the instability is both in terms of the revenues, but it's also results in frequent temporary tax hikes. Most of those tax hikes, temporary tax hikes, are in the B&O tax, regardless of whether or not a business is profitable. We oftentimes have resorted to B&O tax hikes even during downturns. Finally, our tax system is probably one of the more uncompetitive tax systems out there in the country. According to the Council on State Taxation, which is the National Chamber of Commerce's arm that focuses on state tax policy, Washington's tax burden on private sector business is actually higher than it is in California or Oregon or Idaho. And the reality is that the B&O tax actually raises a lot of revenue in this state. While it's a pretty stable revenue source, it's quite burdensome relative to other states. And, I know a lot of attention has been focused on Boeing and Boeing's tax reductions, but the last time I looked at this, when I was chair of the House Finance Committee and had access to this information, it looked to me like Boeing's big tax reduction actually resulted in Boeing being taxed at roughly the rate they would be paying in some other state like Idaho or Oregon. So actually relatively competitive. So I think, we really need to take a look at the competitiveness of our tax system. Now, I've often argued that we overtax two groups in Washington state. We overtax working families with low or limited incomes, and we overtax business. And I think that we need to acknowledge that and look for a tax system that does a better job of that. We need a tax system where growth in the tax base will keep pace with growth in our economy so that we can actually sustain a quality education system, not just adequate, but a quality education system. Now, a lot of you know that raises the question or the issue of income taxes. And income taxes have a long and sordid history in this state, and we've never seen one, at least not since about, I think we had an income tax back around the Civil War time, during the time before we were a state. But the reality is that income taxes have not been very popular. And I think that it's time we had a non-ideological conversation that is more focused on how do we manage our finances going forward. Can we have a discussion about income taxes where we're talking about a flat tax rate, not one that is poking at one group or another, or saying that you're rich and so we're going to tax you heavily, and you're not rich and we're not going to tax you at all. I think that what we really need to be able to do is to talk about having a flat tax and a non-ideological conversation. Most of the tax proposals that I've seen in recent years have been more designed to get people to actually fund the campaign than they have been designed to create something that the voters are interested in supporting. And I have to tell you that before I took this job, before I was a state representative, I was an economist at the University of Washington, and part of my research there, one of the things we looked at was state tax policy, and what we found was the presence of some kind of a personal income tax in a state was a major source of lowering business tax burdens for the rest of the state. That was the only significant factor we found that affects business tax burdens, is the presence of a personal income tax. So I believe that we can actually lower, not raise, property taxes. I believe that we can keep or lower the sales tax rate. I believe that we can give everybody Boeing's B&O tax rate and lower the service tax rate. I think we can sustain a high-quality education system without resorting to high local tax levies and tuition hikes. But I think that we will have to convince the voters to amend the Constitution. We'll have to convince the legislature to amend the Constitution first. And more importantly, we have to convince the voters that we're not out to gouge them, but that we need a change in taxes so that we can have the kind of quality education system this state is going to need to be truly competitive in the future. So I think that there's a place here for a grand bargain. As a progressive Democrat, I'm willing, if you can give me a tax system that will grow with the economy, where the tax base doesn't shrink relative to the economy, but keeps pace with it, not grow faster, but just grow with the economy. I believe that I would be willing to consider a limitation in the Constitution on how we change tax rates, so that we would have a supermajority requirement of how we change tax rates in the Constitution. I think if you have a tax system that grows with the economy, the need for tax changes will be less, and I think that any major changes that would have to occur should require a supermajority. That's a big trade-off. But I believe that Washington is in a unique position. As I look forward in the long term, Washington's economy is doing quite well at this point. We're well positioned for the 21st century. We have a number of terrific industries here, very smart people, very successful companies that are producing and promoting great technologies and great products. We're well positioned geopolitically. We're midway between Beijing and New York. There's absolutely no reason in the world why Washington, given its wealth, given its intelligence and talent, given its capacity, shouldn't have the very best education system in the country, if not the world. We shouldn't settle for an adequate or declining education system. We actually should be investing in our education system in a trained workforce that will keep and attract business to this state. So that is my vision of the future, and I'm more than happy to have a conversation with you about the future. Thank you.
Well, thank you, Jim, and we do have some questions. I'm going to take the first one here. Do you have concerns with the governor's proposed capital gains tax to fund education spending? It looks like S&P flagged the proposal as a potential area of concern.
Well, first of all, I guess I'm not as concerned about taxing capital gains as I am about how you spend the revenues, and I'm a little concerned about whether or not we will become too dependent upon those revenues. I know that proponents of the capital gains tax have suggested that they would only spend a portion of those revenues, and as a former member of the House Appropriations Committee, I can tell you it's very hard to resist, particularly when things get difficult and tight, to resist spending all of the revenues. So I'm skeptical of that idea, but I do think it was, the governor's proposal was useful in at least helping us think and understand that we need to expand our tax base and to get out of this shrinking tax base environment. So it was a useful proposal to put on the table, but my concern is we not get over-dependent on it, a highly volatile tax source like that.
Okay, next question. So if Washington's economy is poised to grow faster than the rest of the country, can you explain further why the tax base is shrinking relative to the state's economy?
Again, I would come back and say the reason our tax base is shrinking is that our tax base is only growing at 4.5%. It's only growing at 4.5% in part because of the limitations on the property tax and because of the limitation, the nature of the retail sales tax. That portion of our economy that's subject to the retail sales tax is actually not growing at the same rate as the rest of our economy. That's what shrinks it.
So the next question is, how much has the general fund grown over the past 10 years? At the same time, is this a question of reduced tax base or rather unremitting growth in legislators searching for ways to spend money?
Let's see. There's a couple of questions packed in there, so let me see if I can unpack it just a little bit. I think that this biennium we got back to the state spending level that we were at in the 2007-2009 biennium. So it shrank substantially during the Great Recession, and it has recovered to that point. So in effect, we have not grown state spending as dramatically as some might have thought. What was the rest of the question?
Legislators' unremitting growth for ways to spend money. Well,
the reality is that we have there is always a demand in the legislature to grow revenue, to grow the spending, and I served on the Appropriations Committee for the entire time I was there. There is an unsated appetite there, and that will never be sated. And it's appropriate for the legislature to make decisions about priorities and how it should spend money. But the reality is that the money they have to spend is not growing at the rate of our economy, and it's not growing at even coming close to keeping pace with the demands, particularly as we see now with the court's expectation around coming up with somewhere between $4 to $7 billion additional money for K-12 education.
So next question, voters have routinely rejected an income tax. Do any of the non-income tax states have a good model to look at?
Well, most of the non-income tax states actually have substantial natural resource revenues that, particularly oil and gas, or Nevada, for example, they're a sort of a target gambling location. So, most of these non-income tax states actually have another way to earn most of their, receive or earn most of their money. Washington used to have a pretty active and robust natural resource economy, but that is actually a much smaller portion of our economy now, and we don't tax that quite as heavily as we used to. So we don't really have the same kind of structure, economic structure, as other states. The tax commission that was created in 2003, I believe it was, known as oftentimes as the Gates Commission, which I served on, spent a lot of time trying to come up with another tax methodology. We spent a lot of time looking at value-added tax, and as an economist, I actually like the value-added tax. Be happy to be able to consider that here. We considered it long and hard and decided that if we don't have a national value-added tax to be part of, it's very difficult to administratively make that work in Washington State. And so we pretty much set that aside. So alternative models, there really aren't a lot of good ones.
Fair enough. How about this one? Citizens think businesses don't pay enough taxes. How will they be brought along in this discussion?
Well, that's actually part of the reason that I'm having this start this conversation here, is because it has long been my belief that this is a concern that should resonate with the business community. If you look at that downward chart, most of the activity on taxes and most of the activity on legislative taxes, when they want to raise taxes, it focuses on the business community. And you're right, a lot of people think that businesses don't pay enough taxes because they don't see the B&O tax and they don't understand it. And I think it's time for the business community to be part of this conversation. And I would say that the business community right now, in terms of raising revenue for the next couple of years, is going to be behind the 8 ball. Most people don't want to see their sales tax increased. They don't want to see their property tax increased. And the legislature understands that. They're political beings, and they're reluctant to talk about those things because it engages a significant tax increase debate. Whereas if they talk about raising the B&O tax, maybe 20% of the population appreciates the fact that that has some impact.
So back to a little more technical question. We have seen with states go from a non-income tax state to an income tax, like Connecticut. There are new vital funding needs that will soak up any new tax revenues. What assurance do we have that we will not end up like California or Connecticut?
Well, my guess is that that's one reason why I think that we need some kind of a constitutional amendment that might actually include a supermajority requirement for legislative votes to change tax rates, so that as a result, You can assure the voters that you have a tax system that is designed to last for a long term, and that it is designed in such a way that there's got to be a fair amount of consensus for agreement on this issue.
So,
and frankly, to convince voters we're not out to gouge them.
You make a very good point there. 2 more questions. Does inflation-adjusted per capita state government spending show a similar drop over time, or has spending stayed steady while GDP has increased?
That's a good question. I don't have the exact numbers before me, but I can tell you that if you look at state spending relative to other states, we've dropped from something like 11th highest on a kind of per capita basis to about 35th. So our spending has declined over the course of this time frame that we've got in front of us.
Okay, it looks like the last question we have here. You make the statement that income tax can result in a lower business tax rate. If that is true, how do you explain California?
I didn't say it will. It can. And I think that's why we have to have a really careful conversation about this to make sure that we actually get into some of the nuts and bolts in this, and that we put in the Constitution enough considerations and concerns about how you actually change tax rates. Right now we have a system that there are limitations in the Constitution on the property tax, and there is at least a court interpretation that we can't have a personal income tax. And so as a result, those are pretty much the limitations on taxes. It may be that we want a more constrained environment for tax changes in the Constitution to give us that kind of protection.
So Jim, any last closing remarks you'd like to share with us?
Well, I'd just like to say that, we're going to have to find a way to better fund public education in Washington. We have clearly come to a point where we have shifted a lot of the burden to tuition payers and to local school districts and local property taxpayers, and we really need to stop and think about how we want to fund public education going forward. We need to find a way that we can do that on a stable basis and sustain that over time. With a shrinking tax base relative to our economy, there's no way, there's just mathematically no way that we can sustain education funding with the current tax system. And it's time for us to have this conversation, I believe, in a non-ideological way, to simply sit down and say, how do we manage this going forward? How do we manage this for the long term? Not just for the next 2 years or the next 4 years. How do we manage it for the next 25 years or for the next century? Thank you very much for the chance to be here.
Well, and thank you. Thank you. As you know, the business community has struggled with B&O tax since its inception, and AWB recognizes the need for this type of candid discussion on tax reform. And while the solution may be difficult to find, we appreciate you very much greatly spending time with us today, Treasurer McIntyre, for engaging the business community in this discussion. Old habits die hard, sorry. And we also appreciate you, our members, for taking time and listening in and asking your questions. Our next webinar is on Friday, March 27th at 11 a.m. on the subject of property tax levy reform. And we will hear from Senator Mark Mullet on legislation he has introduced and views from Representative Chad Mogendas. If you think of questions that you didn't have a chance to ask today and you'd like to ask them, just send me an email at amberc@awb.org and we'll get that answer to you. Thank you for joining us.
Thank you.